When we talk about startups, India has become the third largest startup ecosystem in the world today.
That a lot of businesses and a lot of future business is going to come from a lot of the small players, these new age startups, and we need to be aware of that and invest ourselves in those businesses and in those ideas.
The market is extremely large. In fact, it's a blue ocean. That's how we term it. And we actually need a lot more startups in this space. Very few of them in the space right now.
If you're able to, be a responsible fintech, you're going to have a very large opportunity. Whether digital banks will come or not is a question none of us can answer.
Fintech is taking what exactly a bank does in a more efficient manner. You slice the bank to cater to a specific consumer type and a product type, but you service all the products underneath in a more efficient manner.
I think this is a very, very interesting topic, close to my heart, because in KPMG, I actually lead the startup practice. And for last 8 to 10 years, I've been dealing with a number of startups across FinTech, EdTech, e-tailing, and a lot of them have already become unicorns today. So as I sit over here with some of the companies, which I can't call them startups, I think they have already increased their business. We have people from Nexus and multiples, I think, who have been regular investors in this space. Very interestingly, when we talk about startups, India has become the third largest startup ecosystem in the world today. And the number of startups they are actually producing incrementally might be actually larger than some of the other countries like US and China, etc. And to that extent, and some of the innovation which is happening over here, or some of the disruptions and disruptive ideas which are coming, are something which are going to become global. So while Silicon Valley on its own has a much more interesting ecosystem as far as the startups are concerned, because the way the funding happens, the way the accelerators are there, incubators are there. But if you ask me from an entrepreneurial spirit perspective, I think India is actually almost leading the world now. So just coming back to the topic, I think we are talking about fintechs. And so what I'm going to do is, rather than introducing each of the panel members, I'm going to get each of the panel members to actually start introducing themselves, because I would like them to actually talk about what they do also. And whatever you may say, I won't be able to do justice by talking about what they do. So what I'll do is from my right-hand side extreme, I think Yeshu, the youngest amongst us, I think maybe he can introduce, because he's the most exciting guy. I spent only 10 minutes with him because he is going to talk about crypto and blockchain. And that's something is going to be very exciting. After that, I think Trevor is going to talk to us. And Trevor is a very, very important intermediary when it comes to the entire startup ecosystem. He has been actually mastering the entire payment gateway, and he's going to talk a little bit about that. Anand himself is Nexus partner, is what you call as they are a serial investor. We talk about serial entrepreneurs. They are the kind of investment they've made, and some of the risks they have taken, and most of them have actually given fantastic results. And maybe I'll get Anand to talk about that. And Vipul, again, I think is a very interesting startup. I don't want to use a startup for him because he is a neobank, one of the initial neobanks in India, and he is going to talk about what a neobank is, and that is going to be a very, very exciting thing which is going to happen to India as a country, because some of the things which you walk into a market, or when you are going on a road, you see State Bank of India, you see Axis Bank, etc. He's one of those guys who's not going to put his board, because he's going to have only digital branches. So that's going to be the most interesting part. Then Nithya, I think Nithya is part, again, a serial investor, multiples alternate asset management company, I think, who've already invested more than $1.5 billion across the value chain of the startup ecosystem. And I think we're going to ask her what are the new trends, especially on the fintech side, she's seeing. I think and Akshay is very. When I actually read the name of his company, EarlySalary, I didn't have to think what he's doing. But as I spoke to him, he said that we are not only doing actually trying to give advances before the salary is received. We do much more. So we're going to hear from him what exactly does he do, and maybe I think as we hear these guys and as we get into conversation, our idea would be that we want to see what are the new trends which are coming. Some of you might be investors, some of you just want to understand from a technology perspective. We're going to hear that. So let me start for Yeshu, please.
Thank you, Amarjeet. So hi everyone, this is Yeshu. I am a co-founder and CTO of Transak. So about me a little bit, before I'm into this crypto space since last 6 years now. And this is my second company in crypto space. Earlier was also in like cryptocurrency trading platform, got a small exit from there. And yeah, started this Transak two years back. So what we are doing in Transak, we are a crypto payment gateway. So probably just to see the audience, how many of you guys invested in cryptocurrency? Please raise your hand. Cool. Yeah, quite a bit. So about us is like we work with exchanges like WazirX, CoinDCX. We are not an exchange. We are we help applications to onboard users, like decentralized applications, especially or applications who wants to be in the crypto space. So if you guys see MetaMask or those wallets, you guys will see Transak there, as people can directly buy cryptocurrency using INR or local payment method in different countries directly from the wallet. So that's something which what we do. And now we are seeing major trends going where centralized finance application like let's say application who are in mutual funds, let's say Grow or ET Money or like there are many applications who are coming. They are also looking into like a crypto space, like how they can also move towards that. So we also work with those applications and provide that crypto leg as a payment gateway. So yeah, that's something that we are doing. We are 100+ teams and all over the world, supporting 150 payment methods. So yeah, if you guys are building something using the latest technology like crypto under the hood and having high yield or high interest, then we can help there. So yeah, that's a little bit about me.
Thank you, Yeshu. I think Trevor, please.
Thank you. Good afternoon, everybody. So my name is Trevor Goott, and I'm the director of Unlimint for Africa and India. Unlimint is a fintech company. We've got a vision that if you can think about how the fintech world would look tomorrow, we are that, but we're here today. So at our core, we're a global payment gateway. We are in 16 countries. We offer over 1,000 different payment methods locally. And because I oversee Africa and India, there's lots of similarities that I see in the two countries and continents. Now, specifically, what I find particularly interesting and why I'm chatting to you here today is that often I see a lot of tech innovation from startup companies. And any startup company, particularly today, the first thing that they're going to need is somehow a method to be able to accept payment for the goods or services that they are offering. And often I find in my experience, and having seen many tech companies, particularly across Africa and slowly here now in India, now that Unlimint is in India, is that I'm often dealing with very clever people who've written a great piece of tech that solves a great local problem, but they're missing two things. Number one, business guidance or business direction. And number two, they're missing capital. So we also look at, when we're looking at a potential company to onboard to offer our payment processing services, which part of what we offer is the ability for them to scale globally through our global platforms, we also look at them to say, how can we help you grow your business? So from a new age startup perspective, what's also very important is somebody's got a great piece of tech. They've now launched in the market. They're now growing their business. But when you need to look at the data to analyze how actually is my business doing, we've got a very sophisticated merchant reporting dashboard that allows our merchants, our customers, to actually gain insights into how their business is doing, and we work closely with them. So that's a little bit about what we do, and particularly for Africa and India, my markets, I love the innovation that I'm seeing. I love the tech that's being produced, and that's a little bit about what I do and why I'm here today. Thank you.
Thank you, Trevor. Anand, bottom.
Hi. Hi. Yeah. I'm with the investment team at Nexus Venture Partners. At Nexus Venture Partners, we are very early stage investors, what you call as seed investors, where we support the founders from right at the stage when they are probably just thinking to start the business. And then we sort of support them through that. So multiple of the businesses you might have probably on the consumer side, like Snapdeal, Rapido, Delivery, ShopClues, White Hat Junior, Unacademy. We were sort of a day zero partner with them. We have been very, very active in FinTech as well. Bunch of companies over there. And I myself was a founder earlier, a failed founder. I sort of started, but the startup didn't go anywhere. I have been involved with the FinTech ecosystem for a long time as an operator as well as an entrepreneur. And I look into the FinTech investments in Nexus. Happy to talk about all things about startups here right now.
Thank you, Anand. Vipul.
Yeah, hi. I hope you guys can hear me. I'm the founder and CEO of a company called Chqbook. It's a neobank for small business owners. So the customers that we service are the same people who service all of us. Shopkeepers, small restaurants, chemist shops, hardware stores, and so on and so forth. We almost exclusively service sole proprietorships in India. Usually my customers will have a turnover less than 40 lakhs. And they've been ignored largely by the banking industry, since almost ever. So they don't get basic services. I mean, imagine a Kirana store owner that you know walking into a foreign bank branch in Delhi or anywhere else for that matter. They won't get any service. So what we've done is we've actually got three main engines of growth, which is accounts, lending, and insurance, which we provide, which powers them so that they can get easier access to things like current accounts, be able to transact digitally on our app seamlessly. They get access to lending products, both short-term credit for 14 days so that they can buy from people like Metro Cash and Carry or Shop Kirana and so on and so forth. We also provide them business loans so that they can modernize their stores, start becoming dark stores for Grofers and Zepto and so on and so forth. That's an exciting space. We have a subsidiary of our own, which is an insurance broking entity. It's a composite insurer. And through that, we are able to also insure these customers. Because we've seen it in my career over the last 20 years in banking. We've seen many situations where customers don't have insurance and end up losing all that they worked on, their shops, their livelihoods, and the children have to suffer. So we actually make sure that we insure. India is a very underpenetrated segment, in this category. There are over 8 crore such customers. Most of them don't have a bank account or a current account. They either have a saving account or they use Paytm and use some cooperative bank accounts, and they don't get the service that they should. They have to walk, leave their shops, leave their businesses to actually get even basic services, and that's money lost for them. So we want to bring respect to this community, make sure they understand, make sure they get the products very seamlessly. They deserve the same service that an American Express customer deserves. That's our belief. And I think that's what we want to bring to them. They're the ones who do and work for you. During COVID, the Kirana stores were the heroes of this country. And I think we want to make sure that we become their heroes by doing something for them as we go along. That's what we do. Thanks.
Thank you, Vipul. Nithya, over to you.
Hi, I'm Nithya Easwaran. I'm from Multiples Alternate Asset Management. We are a $2 billion private equity fund house. Being a larger fund house, we invest across sectors. Financial services is a very large sector that we invest in. Technology has been a growing practice for us over the last 7 or 8 years. We have had the pleasure and opportunity of partnering some very great founders in companies like Delivery. We typically come in, or Dream11, more recently Licious, MoEngage, Acco, Quantify. So we typically come in at the Series B or Series T stage and see them through, support them through the entire growth phase of the investment. So it's a particularly exciting time in fintech. So happy to be chatting with some wonderful founders here and with Amarjeet. Look forward. Thank you.
Akshay, over to you.
Hi, my name is Akshay Mehrotra. I'm a co-founder and CEO for EarlySalary. Well, we're an instant lender and we basically make life better of young working professionals. Our job is to make sure that you have any requirement of money to make your life better. It could be needing an instant cash, maybe wanting to buy insurance, maybe to get a skill upgradation done, maybe decide to buy a new phone. We make sure that we service you instantly. Today, we are the largest consumer lending platform in the country. We have more than 1 crore Indians who are registered with us to avail our service. We typically do upwards of 3,000 crores of disbursal on the platform. We are able to do almost 100,000 loans a month on a digital track seamlessly. And our motto is fairly simple. How do we assess a young customer instantly? How do we make sure that when you come to us, you're able to borrow in the next 1 minute? Today, more than 90% of our customers end up receiving money from us less than a second. Our strengths to assess the customer, underwrite, allow us to have a low delinquency. And this allows the customer to always borrow almost 40% cheaper than what he'll end up borrowing from a bank. Now, these are extremely good USP from a consumer perspective. The largeness of fintech comes when you bring it to scale. Can you bring it to the larger audience across the country? India is one of the largest economies, but let's give an example of a credit card has less than 1% market share, which means that people don't have access to instant credit. Can we bring it to people's life? Can we become a service partner in a very large way for young Indians? And I think that's the focus that we are trying to address and build out a larger company.
Thank you, Akshay. So, how interesting. We are seeing some very interesting founders who are trying to solve problems. You know, Akshay is trying to solve a problem of many people who are salaried class, etc. You know, Vipul is trying to solve a problem in relation to sole proprietorship on a B2B basis. Of course, Yeshu is forcing us to buy crypto. Of course, Trevor, and I think he is a very important element of success of each and every part of a startup, whether it's an e-tailing business or a fintech business. I think the global payment ecosystem and gateways have to come into play. And on the other side, all these companies are being supported by investors like Nexus and multiples. So very interestingly, I think I'm going to start with the investors first. So let's go top-down approach. And I'll ask Anand, in this entire ecosystem of fintech, I think you've been early stage investors. It must have really taken, some courage, because the Indian financial services system on its own, their adoption of technology was very, very slow. And some of these young boys who actually came with these ideas of they want to actually disrupt and actually challenge the banks, etc. How did you actually think about that? And how did you actually have the courage to invest into them?
No, it's a very interesting question. Actually, in investing, the first thing you look into is the founders. So exactly like what you mentioned, that the crop of founders which is coming up in Indian ecosystem, given how the tech ecosystem is maturing, how the early birds in this segment or sector have set things like look at the policy bazaars of the world, or even just the broad ecosystem of the Flipkarts of the world. The quality of the founders they are producing is just has just changed the game. So that's the very, very base of it. But if you look at what is happening in fintech, specifically in India, while financial services had been slow to adopt technology in India, they have been slower to adopt technology globally, by the way, in a certain way. If you think about, and technology, when you say on the consumer side, because if you look at any financial services regulated institution, they have two customers. One is the regulator, the second is the customer. And then their tech stack and others are built to make sure that they do not, antagonize the regulator. So a lot of security layers, a lot of things which takes care that data breaches don't happen. And that's what generally the first layer of tech adoption had happened. And that did produce a lot of big companies. If you think about it, Infosys is based on, Finacle is a very big part of Infosys. They were also tech companies, but these were not tech product or the consumer learning companies. What uniquely happened in India was this combination which we call JAM, which is the Jan Dhan, Aadhaar and mobile. And then the government laying out the rails around NPCI. And what UPI has done has fundamentally changed the game in India. And last 2-3 years, that's why when you are seeing this lot of this new action happening, is because given that tech infrastructure, so many things can be done, is just sky's the limit. So I have worked in Southeast Asia before as heading some fintech companies over there. I have worked in Valley before. The tech stack on the financial services which you are seeing in India is probably only China is the competition. Nobody else has the same tech stack in India. And that's where you will see us leapfrogging in terms of the innovations that will happen in financial services in India. That gives us a lot of confidence in what we are investing in, why we are investing in. And that is where we are seeing unique founders coming in and using this infrastructure as a solution to create next wave of opportunities. Look at what has happened. It's not, earlier we used to think that lending is the only way that people will make money. Now we are seeing innovations on payments, which is like, look at Razorpay, right? It's a $7.5 billion company. It's at processing like 60 billion of payment going through it. If 4 years earlier, I was talking to someone who was launching a commerce company like 7 years earlier, and he was saying we were at that time thinking whether people will pay through payment credit card or not. When the earlier all the e-commerce companies had come, delivery had to launch the cash on delivery, and everything was still a lot of it happens on cash on delivery, but with UPI and the other, fundamentally the game has changed. So lot of things which are possible now is what is giving us confidence on the next wave of innovation that will happen in financial services in India. So that's yeah.
Oh, that's very interesting. So Nithya, again, I'm coming back to you as an investor. Anand was able to maybe bet on some of these excellent founders, but suddenly we found that India, a land of 140 crore plus people, the number of those founders also will be quite a lot. So we are seeing lots and lots of fintech companies, lots of new ventures. Do you think that, among this clutter, what we are seeing, we will be able to find the winners? And second thing is consolidation on card?
Amarjeet, you want me to put a looking glass to the future, but let me do that. If you see the evolution of fintech, just taking a minute on that, when fintech started, maybe a decade back, a lot of the founders wanted to be on the fringe, in the sense of, I don't want to be regulated. I'm happy to stay a little bit away because RBI is scary, SEBI is scary, IRDA is scarier. So I want to stay there and still deal with the customer end and worry about the risk and the regulation and everything else a bit later. But very rapidly changed, because I think the regulators have also taken positive stances, and so have the founders said, if I want to be mainstream financial services entity, I need to work within this ecosystem. So when we look at companies which are in fintech, and we come in a little bit later than when Anand kind of comes in, and we definitely are looking for building scale, economics starting to come into shape a bit. And at that time, what we are, in addition to a very large TAM and everything else, good founders, everything else that we would look for across the digital ecosystem, what we are looking for in founders is the ability to, work with KYC, work with AML, work with customer complaints. These are the bugbears. Work with cybersecurity, work with data privacy. These are going to be the bugbears of regulators. And if you're able to be a responsible fintech, you're going to have a very large opportunity. Whether digital banks will come or not is a question none of us can answer. But fintechs are going to be far more mainstream. So we are definitely looking for founders who see this early and who want to build this in. The other thing we look at is partnerships. None of the companies today in the digital ecosystem can conquer alone, right? So a lot of the founders, I guess you'll hear here as well, work with the incumbent banks, and how you're able to develop partnerships which are win-win. Because there's very big question is who owns the customer? While the banks are all scared of saying the fintechs are eating my lunch and my dinner and my breakfast, but they're still worried of opening their systems up. So, how do you create this very win-win partnerships with the existing ecosystem of NBFCs and banks? And that will further increase your TAM and economics. So I will talk more about this.
No,
Let's
absolutely.
go to the next question.
So one thing which is very clear, the new age and old age have to coexist.
Yeah.
So the Indian financial services, Indian banking system on its own has to continue, because the depth which it has when it comes to rural India, etc., the fintech will still take some time for it to reach over there. So these kind of alliances and partnerships are going to be extremely, extremely important. And as we talk about the convergence, these are the important things to consider. Let me ask Trevor, because typically when we talk about these new age companies, startups, actually developing their business model, payment gateway is the first element which has to be integrated. And what has been your experience in dealing with this entire startup ecosystem, especially on the financial services side? How many of them have succeeded what they started with? How many of them have pivoted? So would love to hear from you.
Sure. So generally, most of the businesses that we have onboarded and from the startup stage, some have been successful, some have not, but I suppose that's just going to happen in the normal course of business. But what I find makes these businesses successful is their ability to be in control of their products and their services and the monetization of that. So when we as the payment gateway get involved and we work with them, either by us maybe customizing our approach to them to help them understand their metrics better via the dashboard that I spoke about earlier on, or by just giving them access to some of our other products, we can enable them to grow. Also, at the same time, by working with them, we are learning what our merchants and customers want, which would help them become successful, which at the same time can help us become successful, because it allows us to take these new innovations and then offer them to other merchants that we have. So generally, also, when it comes to the onboarding stage of startup companies, these companies are already quite far down the road in terms of understanding their market, knowing who they're going to serve, knowing what their revenue forecasts are and projections are. And I also do work with them, and my team work with them to sometimes give them a reality check just to make sure that they are going to be successful or have at least the opportunity or chance to be successful. Because sometimes I've seen companies that are looking for a partner to onboard, and their numbers are so far out of line that we say to them, listen, before you go ahead and make this investment, please consider this, please look at that. So it's important for us as, let's call it a third-party service provider, to still actually take an interest in and partner with the merchants who we are going to onboard, because their success is our success. And all the time, if we can help them get better, it allows us to get better, and it also makes us more relevant for the future. Because I think in this whole ecosystem, there's startups, they need a way to be able to accept payments, but we also need to be aware that a couple of years ago, payment gateways were saying, this is our product, take it or leave it, and then they would move on. But you can't do that anymore now. You have to keep innovating. You have to be prepared to listen to what the small guys say. And I just say that briefly because often the idea is, let's go for the big businesses, the airlines, the big e-commerce companies, because we can make more money out of that. But actually, we have to be aware that a lot of businesses and a lot of future business is going to come from a lot of the small players, these new age startups, and we need to be aware of that and invest ourselves in those businesses and in those ideas.
Thank you. Very interesting. Vipul, let me come back to you. I think one thing you right now are more on the B2B side. If I try to maybe classify you in terms of the nature of neobank which is being operating and also broadly based on the regulatory framework. Do you think on its own there's enough big market that you can survive as only doing this, or there will be other innovations which will come as part of your business?
Right. So actually, the sole proprietorship, the Kirana store owner, all these guys, you see them all over the place, right? So they are actually larger than the size of the salaried sector in India. It's about 8 crore customers. And they're also the ones who are very invested in their businesses because, unlike us, who are salaried, we can move to another job, but for them, their business is their livelihood. They will do whatever it takes to make it successful because their families depend on it. So the market is extremely large. In fact, it's a blue ocean. That's how we term it. And we actually need a lot more startups in this space. Very few of them in the space right now. And they've been at one side ignored by the banks largely because the salaried segment, corporates, mid-market, government business have been enough for the large banking industry in the country, to grow 30% year on year. That's enough growth, and that's more than enough from a public market perspective. But this community needs very basic things. They need current accounts. 50% of my customers, and we have over 600,000 customers now, 50% of my customers actually have a cooperative bank account. So, the guy actually has to go and get a dot matrix type, passbook printed. I'm sure a lot of you might have, my parents still have some accounts where they still go to a branch. And it's very true for a lot of our customers. It's true in all cities. It's in tier 1, tier 2, tier 3. The experience of a person selling utensils, a bartan ki dukaan in Gurgaon is this, with his bank is the same as the experience of, let's say, a grocery store, in maybe Madurai or Trichy in Tamil Nadu. So yes, there's a massive potential, there's a massive scope, and we actually have a situation where there's so much demand that we can't really keep up with it.
Oh. And so, how quick is the digital adoption by these? These are, of course, everybody has a smartphone today.
Right.
So the adoption of this entire process is how good they are.
Yeah, so I think you have to simplify it for them, right? Why is UPI so successful? It's because anybody, even your Nariyal Pani Wala, whom we see a lot in Delhi and Gurgaon, can put a small QR code, the money comes in, he's sorted. If he had to do some major stuff, he wouldn't have done it. And that's so what we do at Chqbook is simplify process, right? Also, we found situations where, they don't get the respect. So you have, let's say, a cloth store where there is a father who's, sitting at the gaddi. It's called a gaddi in the store. And he's the one who manages the bank account. But he's been told by his son, and I'm sure some of you might have similar experiences with older, parents and so on. He's been told by his son, you press here, then you press here, and then you press here, and you will get one OTP, you enter it here, and your transaction will be over. He has no idea what is actually happening because everything is in English. We are the first current account in India in 7 languages.
Wow.
Unbelievable for a country like India that banks have, not created a current account for this community, which is in their language. It just starts from very basic things like that.
So fantastic. I think the kind of role startups are playing in India is so important today. So Akshay, let me ask you, Vipul is not too happy about the salaried guys. He only wants to help the other guys. So, and you are talking about early salary. I think you're doing much beyond that. And how is, I think, technology, helping you in this entire process? We talk ourselves fintech, but to what extent how deep are we using technology?
So I think technology is the heart of any fintech, right? And let's look at the things that fintechs are today doing to really reach out to mass consumers. First is providing an integration layer so that you can power almost everyone. So if you go to a Jigsaw, Jaro, Upgrade, any skill upgradation platform, you'll find an SDK powering product purchase on EMI, so the young guy can do a skill upgradation. Walking up to a hospital, the hospital credit or the hospital billing system is integrated with an EarlySalary, so that when you walk up to a hospital and you don't have the money to pay a hospital bill, it gets converted to a 12-month EMI instantly without you worrying at that point of time. Similarly, when you walk up to your employer, it's your first day to office, the same way your bank account gets opened through a traditional bank, your actually salary advance get opened up through the employer instantly. The idea is always, how do we look at seamless integrations so that we can manage a large number of customers from various walks of life. That's one part of fintech, right? And usually fintech innovation starts by sourcing of customers and solving for the customer's problem. But then comes the larger component. How do you really build a business behind this customer that you originate, right? And the focus for every company is always going to be, I like this customer. How do I keep him as my customer for many years? Because you can't monetize upfront. It takes time to make money on the same customer. So let's look at today. 90% of my customers repeat with me. I'm able to hold on to my customers, let's say for a more than 5-year window. And that means I'm going to service many more products for him. I'm going to become his instant loan. I'm going to provide him his first time personal loan to maybe go abroad. I'm going to make sure that when he gets married, I'll give him a wedding loan and maybe work with the wedding planners to also get them to pay the subvention amount. I'll make sure he buys the insurance with me. I make sure I become his credit card, and I make sure that I service him in many more requirements. This is the part of how you retain the customers. But then comes the most important part. How do you make sure that you understand risk in a very important manner? And today risk, or let's say data access to almost digital or physical player is almost identical. But then how do you bring far greater intelligence? To Amar, I was giving a good example before, that over time we've been recording customer voices, right? Every time he speaks to us, every time he calls us, every time a bot calls him, just to ask questions, right? And it's not about what you are talking, but what the customer is talking. Do you have listening ability? And when you take the listening ability and combine NLP behind it, here you're able to then risk rank customers, you're able to build probability. Will this customer pay me on time? Is he sounding stressed? Is he saying something and meaning something else, right? Does he like my company to continue with me, or he's going to go to my competition? And when you combine that data with, let's say, continuous underwriting, hitting the bureau, hitting employment exchanges, hitting payment gateway transactions, etc., you actually build such great knowledge about your own consumer that you can control risk in a very strong manner. What is fintech? Fintech is taking what exactly a bank does in a more efficient manner. You slice the bank to cater to a specific consumer type and a product type, but you service all the products underneath in a more efficient manner. So how do you bring your OPEX versus a bank by at least 70% down? How do you bring your risk maybe 50% of what a traditional institution will do? And how do you bring in the efficiency for the end consumer so he likes you from a cost perspective, from an interface perspective, and simplicity perspective? And I think that's what we're really trying to do.
Fantastic. So, Yeshu, let me come to you. I think let's not talk too much about crypto, because crypto is something, Nirmala Sitharaman doesn't like at all. So we will talk about, the technology behind that, the blockchain. We talk about the Web3, how distributed ledgers, etc. What is going to be the application of what you are trying to do right now over and above crypto in this entire financial services ecosystem?
Yeah. So I will answer this like, let's zoom out a little bit. Let's see how is currently going. Okay. So there is traditional finance where all these banks and traditional these financial institutions are there. There is centralized finance where like these applications like lending, borrowing, like any grow or ET money or like customer facing applications are there in the market right now. And the new market is coming is decentralized finance, right? So there are three markets here. And what we are seeing is, like in decentralized finance, um, is fully like the main reason why people are going towards decentralized finance, because it's fully trustless, transparent, and people can invest in right now is for people is more motivation behind is like people are getting high return, like people are investing and they are getting money in like making money instantly using investing in cryptocurrencies. But let's talk about how they what's the technology behind it. So thing is, there are several applications people are building, like let's take an example of top DeFi applications like Aave, Uniswap, or there are many more where people are building lending, borrowing products using the smart contract. So now many of these terms are new for you guys. So these smart contracts are like is a programmable money, like where money is in source code, or like is people write code and the money is in that code itself. So people can write like this, like if this then that, then send this money. So let's say after 10 years, 20 years, how we are seeing this is, let's take an example like someone joins a company, let's say someone joins Amazon as an employee, and then any customer is coming to Amazon, they're buying some products. Things can be fully trustless, where people are paying money to Amazon. Actually, that money is going to the smart contract. That money is automatically distributed to the merchants. Like let's say, and Amazon is charging some small commission, totally in a trustless manner. Like no centralized person is governing that. Let's say if Amazon server is down, still the whole transaction will flow. Like no one can stop that, right? And also the even smart contract can be written where Amazon employees can be paid automatically, where no one can control that organization. That is something new kind of organization can create in near future, like 10 years, 20 years. Like slowly we are moving toward that direction. So that's like ultimate thing what I'm seeing here, using this crypto as a programmable money. And so now that future is too far, but let's come back like where we are right now and how we are proceeding forward. So as I said, like there is CFI, DeFi, and so CFI is centralized finance, DeFi is decentralized finance, and TradeFi is traditional finance. So DeFi is we are seeing a high growth, but they are facing challenges where people are like struggling because they don't know what is private keys, how to create wallets, what is like all these crypto jargons and all these things. Like even like people say, hey, what is cryptocurrencies, right? So what we are seeing is this centralized finance companies are taking steps introducing cryptocurrencies in their platform, like like allowing users to invest in cryptocurrency, just like basic steps, or allowing users to invest in some protocols like Aave, and people can get high yields like 8% APY and all these things, right? Like this kind of thing. It's still they are centralized, but under the hood they are using the decentralized technology. Slowly they are moving like this. And about decentralized market, where there are many developers, young developers who are just graduated from college. They are learning about how to write smart contracts, like creating companies at very young stage. And these developers are holding the funds of like $2 billion, $3 billion, like billions of dollars they are holding in a smart contract itself, like young generation. And what the problem they are facing is onboarding users, mainstream audience, like onboarding people like you and me, like or like our mom and dad can just invest in use those platforms. So here in Transak, we are trying to we are an on-ramp solution where we basically allow people to allow these decentralized applications to invest in cryptocurrencies by their users doesn't need to need to know about all these crypto. They don't need to go to the exchange, buy cryptocurrency. They can directly use their application, right? So imagine one application like let's say Grow can be created using using decentralized application where user is logging via Gmail and totally decentralized application, login via Google login, and they're adding funds using on ramp like us, like Transak. Users doesn't need to go to the exchange, and they're investing in these smart contracts. And these applications can offer all the banking products like lending, borrowing, transferring funds. Like they can create the whole banking solution within the application itself. And we take care of all the compliance in different countries, payment methods, and they just build the whole product, and we take care of all the compliance and also working with like payment gateways like them. Yeah.
So I think Yeshu is talking about the future actually. This entire fintech space, I think, will go for a 2.0 once the blockchain technology is actually used extensively. And Anand, you're seeing that? Is that something going to happen in next 5 years or something maybe little later?
No, there are three parts of it. Actually, if you ask me, exactly like what you mentioned, there is a crypto as an asset class. There is a crypto as a way to transact or a hold of money, sort of a money, and then there is third as a blockchain as a technology towards what it can do. Crypto as an asset class has definitely crossed the critical mass, and we are seeing that adoption because of lower norms of KYC maybe in India or other places, and also the entire thesis around decentralization in the global world. That as an asset class is going to stay. Lot of volatility, lot of things will happen over there. People will lose money, people will make money, so that will stay. As a tender for money or a tender for exchange, I don't think the government will allow it and will go for its own CBDC. There will be a lot of regulation which will come. Regulation will be probably good for the blockchain and crypto, this thing. But the most exciting part is exactly where you said that, where fundamentally blockchain is probably a better technology to work with for financial services. If you think about it, because financial services at a meta level is just exchange of data and ledger to maintain that, right? And in blockchain, you can do a lot of things which brings in transparency as well as non-mutability, and then takes away the central elements from this. So all that financial crisis that happened at the times of Lehman Brothers, and theoretically, and a lot of things which comes from regulation, like monetary policies and others, can be much more independent. I don't think it will go to that extreme. There will be parts of it, like for example, think in insurance as the smart contract. The very simple thing to think about is where there is an independent database. Let's say you are taking a flight and the flight is delayed, and then as soon as the flight is delayed, everybody knows that the flight is delayed. You should not be filing for a claim, and the money should come to you. So that sort of a ease of what Akshay was talking about earlier, the ease of usage, where it sort of creates, those technologies will work out. So things like cross-border remittances, things like escrow accounts, programmable escrow accounts, which can work on smart contract. We'll see multiple usage of that, and we are also seeing that play out.
And Trevor, do you see in your industry the new technologies like this will become very important?
Yes. There's a lot of new technology being developed all the time, but the key here is actually to be aware of what the technologies are and to be able to embrace and adopt them.
Yes.
So in short, yes, you have to be. Yes.
Yeah. So I think from a time perspective, I think we just have 3 minutes left. So Nithya, let me ask you now. You are a little late stage investor, and most lots of your investments would have done well. But what are these new? I think how the existing ecosystem of our financial system and this new age companies in you going to, I spoke about they will coexist. How that convergence will take place? One thing I think which Akshay told me that a lot of disbursement of loans which are taking place by NBFC also today is powered by them. And you also spoke about this is going to be the real trend, that there has to be alliances and partnerships which are going to drive this entire new age.
Yeah, Amarjeet, we are becoming earlier and earlier. Just to say, in terms of investing, we're entering now with B, C, and D. But having said that, startups are also growing up faster, right? You've heard some of the numbers, what Akshay and Vipul and all spoke about, the kind of customers. But answering your question, we are at a very interesting, I mean, we've seen what UPI has done, the open stack on payments. We are going to see that repeating, I think, in lending and in banking overall. We have the account aggregator, which is coming into play with Oaken. And we also have the latest announcement on ONDC, which the government has made. Now, this is going to, if we see even half of what payments has, as UPI has done, I want to call out 2-3 things. I mean, we've spoken about the far future from blockchain and a crypto, but more immediately, I would think lending itself, both consumer as well as SME lending, which is actually a tougher nut to crack, will kind of take off. So I do see this open stack with availability of lots of data from myriad sources, part of which Akshay spoke about, really powering lending. And that's going to happen in partnership with, and we will see more first loss guarantees. We will see more part balance sheets, which fintechs will hold and part which banks will hold, because banks are still the best at raising liabilities. There's no one like a bank to raise low-cost liabilities. So we are going to see some of these partnerships. And neo-banking itself, I want to call out, is going to be a big trend. It's a little bit of a convergence of saying that if I can do lending, I can do investments, and I can offer other products to the same customer who keeps coming back to me on the back of a great customer experience. So these are SME lending, consumer lending, and neo-banking is what I would call out. If I were to say in the next 5 years, where is it that we would want to be investing in, where we see huge scale-up happening?
Thank you. I think we can ask one more question. I think maybe Vipul, let me ask you this question. In the new banking scenario, where you are not living in the world of collaterals anymore, or are you still in some of those B2B lending which you are doing to sole proprietorship? Is there some collaterals you still rely on?
No, I think in our case we do unsecured lending. But in the other segments, of course, we also do insurance. We also have current accounts and so on and so forth. I don't think collateral is really important as long as you are, and it's more in the context of lending that you're talking about collateral. As long as you are underwriting the customer properly, in our case, we do cash flow underwriting, which means we look at bank statements, look at bureau, and so on and so forth. And we underwrite only basis that, solid cash flows, which we're able to look at, and on the basis of that, we are able to underwrite. And I think lending largely is still a collection business, right? So we want to make sure that we understand the customer better. Our collection philosophy is to collect with empathy, because you're working with the customer. I want to build a relationship with him over the next 10 years. So if one loan goes bad, and if I'm not able to understand his problem and work with him to collect the money back, I'm not only going to lose him, I will lose 10 other people who he talks bad about. That's why customer service, empathy, all of that comes in. So for us, it's not about the security. And I've worked in mortgages, loan against property for more than a decade, right? At large banks, HDFC Bank, IndusInd Bank, we used to have security, right? And it's largely because of SARFAESI that you could recover some of that. Otherwise, security in India is not very recoverable. So it's not. It's there, but it's not there. So it's a sort of a weird space. So therefore, I think it's not about security. It's about getting to know the customer better, making sure you do KYC properly. Working with regulators, very important. We work with IRD on insurance already, but like Nithya was saying, you have to work with regulators, because honestly, the regulator is appointed by us, all of us. We are the ones who appointed the regulator to make sure that people don't abuse the system and take advantage of it. So I think that is all goes into the context of saying, do I want to build something for the long term, and a neobank or a digital bank, which will also, I think, Nithya, become a reality for sure.
Yeah, I hope so.
Is extremely important that we're thinking 20, 30, 40, 50 years in the future. And that's how some of these institutions like SDFC Bank or Kotak and so on and so forth have got built as trusted legacies because they worked for 30, 40 years on it.
Okay, I just been told that there's someone who wants to ask a question. So, yeah.
Thank you so much. Yeah, I'm Sunil Kumar Shinde from Mumbai and Solapur. Okay, I'm a mechanical engineer from Walchand College, Sangli. We based a Q&A session in the last session. The same query I also apply for both the session. Hence I'm asking. Okay, since the last 10 years, okay, I observed that my wife has lose so many opportunities in her life because of the work culture. But since couple of years, I'm working on. She has identified two most innovative concepts here. Okay, and we observe that actually it's very difficult to get a finance for such kind of a thing. Okay, because everyone will not go to open a startup. It is practically impossible for everyone. Okay, the same questions also applies for everyone such who are the similar thinker. How will get a finance, quick finance? How much it is easy to apply to get such kind of innovative concepts which across the India? I would like to know that.
And we want to answer that, because
Can I answer that question actually? So, entrepreneurship means the willingness to go out and get the work done. It includes raising money, right? So it's always about, do you know how to execute? Do you have the willpower, capability, team to do it? For example, when we raised our first capital, it happened within 72 hours of thinking about the idea of EarlySalary. On a piece of paper, we went and raised 1.5 million and an NBFC license, right? It was not that the incoming investor thought that the model is brilliant. He just saw that the founders are willing to put in their life to make it work, right? Money comes at each stage, right? And as you build a business, every time is a different requirement, right? Sometimes it's just working capital to procure raw material, right? Sometimes it is to build up a shop so you can get customers to walk in, right? Sometimes you need to hire people, that's why you need money. If you know what the money is going to go in for, then you can make a business case and then go and raise money for it.
See, over the years, I can tell you, for last 8 to 10 years, I've been observing this entire startup ecosystem. And my observation is there is enough money chasing good investments. If you have a good business model, if you have a good execution team, if you got a good idea, I don't think in India it will be very difficult for you not to raise money. Any other question?
Thank you. Hi, my name is Astha and I'm a FinTech lawyer, very much interested in the business side of things. And I heard Vipul speak about how there are very few startups who are sort of focusing on Bharat and then not just building for India. By that I mean people like you and me, right? We have access to so many FinTech apps which cater to us. Simple in English language, we are digitally savvy, so we can access them. But there are very few startups who focus on building for Bharat, right? Which is like the broader segment. Like Vipul said, it's like a blue ocean, right? But nobody is venturing into it. Even though there are products and there are technologies which have been successful because of startups, right? Like UPI 123 Pay and the UPI offline payments, right? The technology which came into picture was through the startups who came up with the technology, partnered with NPCI, and now UPI 123 Pay is a reality. So what is the reason why more startups, more unicorns are not building for Bharat? Is the problem with the unit economics? Is the problem with the profiteering model? Or is there something else which is influencing the choice that these startups are making? So this is something that has been, something that I've been reading about, driving my curiosity, and I thought I would love to hear from you.
First thing is, I'm an accountant. I can tell you, none of the unicorn makes money. So the profit is not an element in their dictionary for their journey, because what I have seen is it's very difficult to develop tech stack, to acquire customer, to retain customer. And when you're getting into Bharat, and that's where I'd like Vipul to answer, because what he's trying to do is exactly getting to Bharat only. Or even if we talk about Akshay also is talking about Bharat, because the point is today, he might be talking about a salaried class, but ultimately the growth is going to come from Bharat for him. And you are seeing these shared services centers, which were earlier all Delhi, Mumbai, Pune, etc. They are shifting to now beyond Jaipur into Indores. So I think this journey has to happen of how businesses are transitioning into Bharat. And otherwise, even if we talk about agri-tech, is a huge segment which is emerging, and you'll see that is getting into Bharat. So maybe Vipul, you want to talk a little bit about.
So I'll, that's a great question actually. And the interesting thing, I'll give you an example, right? So typically my customer who, let's say, runs a small restaurant in Indore, it's not really a Bharat by any perspective, but it could be Gurgaon also. And what he does is he doesn't get credit, for example, to expand his business or go buy more stock. And what he does ends up doing is he goes to a larger restaurant owner or he goes to a money lender. And the typical rate that they pay is 3 to 5% per month, which means that if you take 1 lakh rupees as loan, you're paying 5,000 rupees a month as just as interest. At the end of the year, you'll have to also return 1 lakh. So you're paying 1,60,000 rupees. And you, of course, have the flexibility to pay it back. What we end up doing is actually reducing his cost substantially, because our loans are, usually around 24%, 25% on a reducing balance, which is substantially lower than what he pays. This is literally 60% is what he pays. So the revenue is there. It's just that people haven't looked at it. Like I said, the banking industry hasn't looked at it because, and I've been in the banks, we were very happy building into a 200, 300 crore a month business from 20 cities, doing a ticket size of 40 lakhs with a great property, which we would take as a collateral. And it was fabulous growth. We were growing at whatever, 30, 40% year on year. It's enough. So why startups are able to really go after these segments is because we are looking at it from the customer's perspective. And I think that's what changed. And that's why I made this move from being in a bank, working in a bank. I'm not a banker, like a lot of people say. I used to work in a bank, and now I'm running a startup. And the whole goal is, how can you look at it from the customer's point of view, save his cost, save his time, bring respect for him, and there is a lot of money. Our LTVs are, close to $500, and it's a lot of revenue. But at the same time, you're making sure that the customer saves money, saves time, in the process can access financial services. So there is a pot of gold, in tier 2, tier 3, tier 4 cities in India. And I think more startups need to come in this space. Yeah.
Thank you so much for this.
Okay, thank you very much. I think we are now, time is over for us. The next speakers are here. I think.
Well, before we close this session, we have a small token of appreciation for all our speakers. May I request Ruchika from Exhibitions India to give out mementos to our esteemed speakers? Mr. Amarjeet Singh is a partner in KPMG. May I request Ruchika to give a memento to her? Mr. Anand Datta, Vice President, Nexus Venture Partners. Nithya Yeshuran, Managing Director, Multiple Alternate Asset Management. Vipul Sharma, founder and CEO, Chqbook. Mr. Trevor, Africa and India Director, Unlimint. Mr. Yeshu Agarwal, co-founder and CTO, Transak. Well, last but not the least, Mr. Akshay Mehrotra, co-founder and CEO, EarlySalary. Thank you so much. And can we have a group photo, please?